My next guest on the show is someone who actually coined the word emerging markets when world was only grappling with the whole idea of emerging markets. He actually said, okay, emerging markets are where you actually can invest because they offer growth and they are unknown in terms of an asset allocation. And that very gentleman is joining us live on ET now, and you can see him by now. Mark Mobius. Mark, is it true that you coined the word emerging markets, and with Franklin, you were perhaps the first fund manager who decided to invest outside the comfort zone of US and Europe?
Yes, actually, the first emerging markets fund listed in New York was the fund that I managed that was called the Templeton Emerging Markets Fund. John Templeton asked me to manage that fund, and that was the very first emerging markets fund. Actually, the term emerging markets came from the IFC, the International Finance Corporation. They came up with the idea because before that, everybody was calling it very depressing names like the poor, the third world, the underdeveloped. And so Antoine van Akmel, one day in the shower, thought of this optimistic name, emerging markets. So that's the name that stuck. But I guess I was the one who popularized it.
Great, so nice to hear that. I just wanted to bring this point out for our viewers that Mark was the first official head of an emerging market fund. And when did you start investing in India, Mark? What was that first investment and in which year?
We started investing in India in the early 90s, 1992, 93.
Wow, so you've invested in India for about 36 years and you've been tracking emerging markets for 40 years. So
Exactly.
that brings me to my next question. Having studied the importance of emerging markets and how they move in correlation with the US presidential election, what do you make of Donald Trump's victory? And I'll expand this question slightly, Mark, just for the benefit of our viewers, which is that 2016, when Donald Trump came to power first, the markets were nervous. Markets went into a tailspin. But now he's come back and he's been voted back to power. Markets are celebrating. Why why the market reaction is separate and different for the same
Yes, well,
person?
it's a very good, you mentioned the two periods for Trump because you must remember his first term, he was hit with the COVID problem. And that depressed markets. It had nothing to do with him. That was something because of COVID. Now we're in a situation where he's coming in to revive the US economy. And it's going to be very, very good, not only for the US, but for the world. Because let's remember, the US is the largest economy in the world. And if the US does well, everybody else is brought along. People benefit because more imports, more exports. A lot of people talk about the tariffs and so forth. Sure, there will be tariffs, but at the end of the day, the total volume of business will go up. People will adjust to these tariffs. And Trump is going to institute many, many reforms, particularly deregulation. One of the biggest problems facing not only US business, but businesses around the world is government regulation, over-regulation by governments, where governments tie down new enterprises to start again and be enterprising. So that's a real problem, and hopefully Trump will be able to overcome that. In fact, he's stated that the big problem is not higher taxes, but the big problem is regulation, the government regulation. So I think that's going to revive the U.S. economy in a big way. Of course, the stock market has not been doing that badly in the U.S. in any case, but I think it will do even better going forward. And that will happen also in other parts of the world.
Mark, there are two factors at play. Donald Trump will revive the US economy. That's his elected promise, and that is what he, in a sense, is aiming at. But at the same time, he would also impose a lot of tariff. And tariffs means global growth will slow down. So can America grow at the cost of world slowing down?
I don't think tariffs will mean a slowdown of growth for the simple reason that you're talking about 10% at most for most countries, and people adjust to that very, very quickly. Companies adjust their prices accordingly. People are able to absorb slight increase in prices. And in fact, many prices are going to go down as companies adjust to the deregulation, which will be even more critical than the tariffs. So I believe the tariffs are not going to hinder growth. In fact, you're going to see better growth going forward in the US and the rest of the world, and particularly India. India is doing very well, as you know.
Mark, it's also believed that the China comeback has, when China was ready for a comeback, Trump has also made a comeback, which automatically will have medium-term and long-term implications on the Chinese export economy. So this entire talk of China coming back with stimulus package, could that really fade away with Donald Trump coming back?
Well, China has many tools at its disposal. Unlike a lot of countries where you have to go through a long, drawn-out legislation and debate and so forth, China can say, look, okay, Trump is going to impose a 10% tariff. We will devalue the renminbi by 10%, making the Chinese goods very competitive globally. Of course, other countries might be hurt by that, and they may have to devalue in line with the Chinese devaluation. But the Chinese will find ways to get around these problems. Already, they've been building plants in other parts of the world, which, by the way, is a good benefit to other countries, particularly in Southeast Asia. And as you know, Chinese companies are moving to India to produce because this is one way to get around the US tariffs. So I don't think China is going to be hurt very significantly because they will be able to adjust to what the Trump administration is doing. Now, a lot of people say, well, what's the use of having these higher tariffs in the US if the Chinese can adjust to them? The use is, of course, and as Trump has mentioned, it brings in a lot of money into the US Treasury. So you begin to tackle the big US deficit with a higher tariff, but it won't mean inflation because prices will not necessarily go up. They may even go down with the devaluation of the Chinese renminbi and other currencies.
So next 3 years, Mark, which end of the financial market do you think will go lower? And which end of the market do you think will go higher? Because a lot will change. It's like a big shakeout which will happen. And when typically then when a shakeout it happens, it really stirs a lot of things.
Well, equities will do much better, first of all. That's my view. If you look at fixed income, of course, if interest rates go down, then you have a situation where fixed income prices start adjusting all over the place. So you're going to probably have a lot of volatility on the fixed income side, but equities, I think, will do much better.
Mark, at what level do you think the vigilantes of the bond market would come out and say that, okay, you got to stop printing? Because the idea here is to pump prime the US economy, keep corporate tax lower, and keep tariffs high, and keep on cutting interest rate. That seems to be the master plan, where rates should be low, tariffs should be high, taxes should be low, and that means money printing will continue. So at what point in time the vigilantes of the bond market will come and say, stop it?
Well, if you look at the money printing side of things, first of all, by the way, which is directly related, of course, to inflation, the more money that's printed, the more devaluation of the currency takes place, and the more inflation you have. And if you look at the growth of money supply in the U.S., it's actually been flat. There's been no growth. In fact, money supply has been going down, not up. So that's one of the reasons why you're seeing inflation in the US beginning to decline. As this continues, and if it is continuing under Trump, then you'll see inflation coming down as long as they don't and increase the money supply and have that grow at a faster pace. As I say, currently it's flat. There's no real growth of money supply in the US.
Mark, so let's put in India in the equation. If manufacturing moves from China, is that good for India? Do you think something could go against the Indian IT sector, which in a sense has been the backbone for the Indian economy? Because these are two moving parts. What comes from China to India and what goes from India to other countries?
Well, first of all, there's no clear path to a high-tech revolution. You've got to take all the steps. You've got to move software companies into India, which already has happened and which is continuing to happen. But you also got to get the hardware into India, and that's beginning to happen. As you know, there've been some massive semiconductor investments taking place in India today. So it doesn't mean that manufacturing will stop or decline in China. What will happen is the high labor input manufacturing in China will move to India and to other parts of the world because labor rates in China are going up, not down, and also the population is aging. So the combination of these factors will be very, very beneficial for India going forward. And I believe India will become a major force in high-tech technology, innovation, and manufacturing. So we're in a very, very sweet spot when we're in India when we look at all of these factors.
Mark, when we spoke to you last, after that, benchmark indices are down 5%. Mid and small caps are down by 15 to 25%. Have you increased your India exposure?
Yes, of course, when the markets go down, it's a good time to be increasing. So when you see a correction, doesn't mean that this correction is over. You probably see a little bit more downside, but it's a good idea not to worry about these short-term movements. Look at the long-term growth of the Indian economy, which is continuing. And now with Trump coming in, I believe the global economy would be much better, and that will help India as well. So, and by the way, the other aspect we have to remember is the peace initiative that Trump will be starting. He will want to end the war in Ukraine. He will want to solve the Middle East situation, and he'll want to have some kind of accommodation with China. So all this will augur very well for the rest of the world, including India.
Mark, so have you increased the number of stocks which you had in your portfolio, let's say in September end versus October end? I can actually count. You had about what, 11 stocks? Have you made them 13, or have you added more to those 11 stocks?
No, they've been about the same, not in no real addition. There have adjustments here and there, but no real addition.
You do have exposure to Indian mid-cap IT. Any specific reason why you're leaning towards that sector? Because a stock like Persistent has been a long-term holding for you. A stock like CI Infosystems, again a play on maps, has been a good hold, has been an old holding for you. What makes you so bullish on these mid-cap IT companies?
Well, first of all, mid cap, if you pick them right, become big cap. So if you pick the right stocks, you will then be riding the wave as these companies get larger. And then, of course, when they become part of the index, they take on a whole new nature and more support by the market. So that's one important reason. Another is that very often this mid cap and small cap stocks are not very well noticed in the market. Not many people know about them. So in that case, you want to be sure that you're getting information which is somewhat unique and different from what other people are getting. So that's another big advantage. And of course, if you're starting with a lower price, the upside is there as well.
Mark, I distinctly remember you mentioned that you are looking at Vodafone Idea. You were not so sure, but you were considering buying into Vodafone Idea. Have you made up your mind? Is it a big yes or still a big no on Vodafone Idea?
No, we're still looking at it. We haven't made any decision on that yet.
The stock's come down from 19 rupees to 7, 8 rupees. Why aren't you buying it? What is stopping you from buying it?
We may come down more. Let's see what's going to happen to the price.
Why do you like banks like ICICI Bank, and why is that you don't own the FI favorite, which is HDFC Bank? I mean, every FI in India loves to own HDFC Bank, but you don't own HDFC Bank, you own ICICI Bank.
Uh, well, ICICI is much more diversified, number one. And by the way, I must say that we're not big fans of banks to begin with. It's quite unusual that we would go into banks, and simply because they generally tend not to be too transparent. But I think the difference with ICICI is that it's very well diversified.
Reason why you only have, let's say, 3 Nifty 50 stocks in your portfolio: ICICI Bank, Tata Steel, and Bharti Airtel. Out of the remaining, investment, you have largely mid and small cap stocks: Persistent System, Metropolis, Dreamfolks. Any reason why you only have 3 Nifty 50 stocks? Because the narrative in India, at least with fund managers, is that small cap stocks are expensive, mid cap stocks are fairly valued, and large cap stocks is where the value is. Your portfolio positioning is the other way around.
You see, you must remember that large cap does not necessarily mean low value. What we look at is not whether a company is large cap, medium cap, or small cap, although we tend to favor medium and small cap simply because the valuations tend to be better. But what we do is we look at the return on capital, we look at earnings growth, we look at the debt to equity ratios. These factors, these value factors and growth factors are the criteria we use to find stocks. Now, whether the stock is medium, small, or whatever, of course, there has to have liquidity. We want to have at least 2 million, 1 to 2 million US dollars in daily liquidity. Other than that, we don't favor one or the other in terms of size. We're looking at the valuations. It just so happens that when we do our valuations, we find that these small and medium cap companies come up more.
Before we wrap up, Mark, every investor has a checklist. How they analyze a company, what are the factors they look at. How does Mark Mobius' checklist start? What are the 3-4 factors which he always looks at while analyzing a company and while making a decision to buy? What is that investment framework of yours?
Well, the main criteria, by the way, there are many things we look at, but the main criteria to begin with would be return on capital, return on assets, debt to equity, earnings growth. Those 4 factors are most critical. At the end of the day, you need liquidity, as I mentioned. So, 5th item would be the daily turnover of at least 1 or 2 million US dollars a day.
All right, Mark, really appreciate your time. So glad you could join us with your brilliant analysis. Certainly hope to see much more of you on the show and on your next visit to India.
Thank you. Bye-bye.
If you like this video, then like, share and subscribe to ET Now.